Hey everybody. Hey Jack.
Hello.
I'm just sitting here enjoying the music.
Yeah, I know. Keep going. Hey, Will. Yeah, that's good stuff.
Hey, let's see. Let's pull this over, share the screen, and we should get started. So the profits and performance shown today are not typical. We make no future earnings claims. You might lose money doing this thing we do called trading. Be careful out there if you use real money. Now we're going to show you off a system later on that excuse me, has about an 81% win rate with an average return about 52%. Each trade targets roughly $2,700 in income based on a $5,000 starting stake. How much money could you lose? $5,000. Be careful out there. Can you do it with less money? Absolutely. The average cost per trade is about $250 per contract, so you can do it with as little as $250 risk on the table. We cannot guarantee any specific future results. There's always a high degree of risk involved in all trading. See the terms and conditions on the prosperitypub.com homepage or jackcartertrading.com homepage or jeffreytrader.com homepage. Terms and conditions are all the same. Remember, there's losers when we trade. There's no black box miracle system that prints out winning trades. The whole purpose of mine and Jack's work and research with traders is to try to give you an edge in the markets. If you can't handle losing trades, you don't want to lose money, don't trade with real money. You can paper trade, you can practice trading until your heart's content and never have a real dollar at risk. Be careful out there. You can lose money in the markets. Isn't that right, Jack?
That is right. You would think that you can't in this kind of a crazy market, but you can. And you probably will have a loss sometime before the end of the year, even though this is a great time to trade. I'm ramping up my volume of trades. It's most active I've been in a long time, kicking off this third quarter.
You know,
Although,
Jack, right here, last summer, when the Japan carry trade blew out, I predicted we'd see the Nike upwards of 48,000. And here we are on a new, aggressively conservative prime minister that defeated all the odds getting elected over the weekend, and the Nike popping to 48,000. Why does this matter for us? I look at the Nike as a global liquidity indicator. When this thing's running and ripping, we have global money flowing around, fat, juicy, and loose. What does that do for us, Jack? Do you have any idea?
pumps up the market.
Pumps up the US markets, pumps up Bitcoin, pumps up gold, pumps up everything that's risk on. Gives us opportunity to make money. And
And
this might be the start of the blow off top I've been talking about, Jack, right here.
yeah, well, we're going to have to see KWEB join that blow off top. And we've got IBIT at an all-time high. Wow.
IBIT. Whew, look at that.
Hot in the
Smoky.
hot tub, baby. I can feel it.
I got called out of my shares over the weekend, booked that out, juicy profits,
I don't know if
and
I'll have to look.
I had a 66 call sold
Oh,
and
yeah, that for
got
sure.
uh got called out.
Yeah,
So
70 and a 71. I think they expire the 17th and yeah, so I'm good for a minute.
so I made 30 bucks on the call that I sold and 150 bucks on the shares, so 180 bucks on that call out. I'm not crying. Just for 100 shares.
Mm, mm, mm.
Plus all the premium I sold along the way. That was just a finality move. So that was a pretty juicy trade. I'm moving on for now. I've got some TSLL I'm loaded up on. Got that circle trade that I put on last week. So in case anybody missed it, we talked about Circle. Jack's been trying to convince me we're going higher here. And I put a little money where Jack's mouth was. Now, instead of playing an option right here, instead of playing an option on Circle, because that's pretty rich, I have to admit, like even for my $100,000 account, that's a little rich. But I jumped over CRCA, a 2x leverage, and I sold a 17 put out here for the main monthly October expiration. Why would you do that? Jack, why would I do that?
Well, you're going to get a huge premium
I can't even pull up the options on it on here. Let me load in a trading platform really quickly. And CRCA is the ticker right here. Sold this baby. Got a fat premium. And we did the math last week. That was over 300% annualized
That was
right
huge.
there. And it's basically the same kind of price. Like you could probably still get about $100.70, maybe $1.80. I got $1.80 on here.
Mm-hmm. For the
We got
October
11.
15th. Yeah.
We got 11 days left till this expires with still big fat juicy premium. Now, right now, the spread super wide. The options kind of not very liquid. This is not the top player out there, but most people playing calls. I'm over here playing some puts. And if Circle is going to pop out, Circle is going to pop with it and with a 2x leverage. And I'm going to collect some money just on these puts. I may not ever take shares. I may never get involved in the shares, but I may only go one time on this too. So we'll see. What do I need to happen? I need this to, I mean, I don't need it to do much. I mean, it can stay above 17 and I cash out my full $1.80 per share times 100, which is 180 bucks. When we annualized that last week when I did it, that was over 300% return annualized. That's pretty spicy. Now, if this ends up down here, anywhere below 17, I'm going to take some shares. And then I'll look to play the upside on those. But we were looking at it, Jack. The upside on Circle, if this thing actually pops out, and I saw some interesting information on stablecoins over the weekend. It's over a $300 billion market. Look to double into next year. If this thing pops up here, maybe 400 on the extension,
Wow.
pull back from high to low down here. We can see a 400. Now, that sounds like a lofty number until we run some percentages. This could pop up 340, 385, 500. I mean, this could be some crazy numbers. Crazy numbers. You do the fibs a different way, go off the low to the high to the expansion. Now we could be looking at, remove the wrong one. Low, high, low. Yeah, we could be looking at 500 just for a corrective move, just up to that fib level right there.
But not until I get a little more. I don't have everything I want yet. I've been buying it on the way down. This is something I've never done. I just think the story is going to come to fruition is the only reason I'm doing it. But I normally never touch stuff that doesn't have enough data, right, to tell a story from the chart. I'm going to wait for the story to come out from the company.
So let's just go with 400, right? Just under 160% upside. All right. We take that over to CRCA. Simple math, 160 times 2, that's 320% upside. Go from where we are. We have to pull it down a little bit, 320% upside. This is why just buying shares could be, I may just sit on the shares if I get put those shares. But we could be looking at a move to like 75 from 18. Now, before you go putting your whole account in this is a highly speculative investment. And any big pullback in Circle, see the underlying CRCL, a 50% pullback in Circle, when you 2x leverage it with the Ultra, that'd be 100% drop in Circa. So be careful. 50% pullback here. So 50% pullback here could get you 100% pullback, and this could go bust right here. So when you add leverage, it's highly dangerous. Not for all investors. I wouldn't go putting much more than, basically got 1,700 bucks at risk minus the 180 bucks I collected in premium.
Yeah, and again, people, this is not normal for either one of us. This stock does not have enough trading data to fit into either one of our profiles for a good trade. Again, I'm just trying to get ahead of the curve. I think the story is going to come out good, and they're unique in what they do. I like that part too. So we'll see how this goes. And tokenization is the future.
And I saw that over the weekend, we were talking about this kind of casually, that crypto.com partnered with AWS, like the web services part of Amazon, to create some tokenization and possibly payment systems on crypto.com's Chronos system. And that's their coin is called Crow USD is what it trades under. And right now it's been on a pretty good tear when DJT, Trump Media, announced they were taking a large stake and buying these on the market. Had a nice little pop. We've gotten a pullback. Not quite to my technical pattern on the daily chart, but it was on the 4-hour chart. We might see another expansion on this. And you know what else they announced? Chronos, crypto.com. They announced the full suite of CFTC approval. So now they're a broker dealer, a market maker, and everything in the futures market, fully approved.
Wow.
They're the first crypto company to have the full suite of CFTC approvals. They can do prediction markets. They can do everything. So this is pretty interesting right here.
I used to trade that coin so heavy back. I think it was 2021, 21, pretty much. Where was it in 21?
Well, I'll have to zoom out here. Yeah, 2021 we were ripping higher back here. Yeah, back here in 2021 was right there. It was juicy.
Yeah.
I picked up a boatload. Just I have about 75,000 of these with a 13-cent cost basis right down here.
Very nice. I bailed on the whole thing. I had the card. I liked the company, and then I just bailed on all of it. Huge letdown.
Yeah, I mean, it's not really been doing a whole lot since the crypto winter. And in fact, it didn't even bottom out until here in 2023, well after crypto winter, well after Bitcoin started recovering. So this one's been kind of a disappointment, but right now we've got a trend going of higher highs and higher lows with a potential to keep going a little higher. If we get a pop up into the dollar area, I will probably liquidate my 75,000 and be out of that.
So, Marina, where the trade for Circle is that Jack is getting into the stock and also going to sell some naked puts on CRCA. That's the trade on CRCA. Not much on CRCL, but we're going to sell the 17 strike price puts naked.
You've just been accumulating shares here, right? If I understood.
Accumulate shares under 150 and buying it on the way down, something again I never do. You would
But
see
this is the trade I did on CRCA.
Yeah.
I sold the 17 put. That gives me the obligation to buy CRCA, which is leveraged shares on Circle, 2x leverage at 17. That gives me the obligation. If somebody wants me to buy those, they can put it to me anytime. Right? Even if we're at 20, they could put it to me at 17. That'd be crazy, but they could. I got paid $1.80 per share. I have one contract. I'm not going big. This is a very speculative trade. Only going to risk one contract. I mean, typically I look to make $200 a week just when I do a regular full-size position. And this was paying $200 for one contract. Usually I'm having to do 5, 6, 7, 8 contracts of a ticker. This I can make it in one, but I did buy a little more time with this trade. So it was for 2 weeks. Now it's for 11 days. It is very risky. If this ends up below 17, You have 1,700 bucks at risk minus the credit you took in, whatever you take in when you get into this, if you get into this. Do I recommend you do this? Absolutely not.
Carol says, I'm not seeing the stock on Schwab. You would not see crypto.com or the coin CRO on Schwab. You would see
Yeah,
that on Coinbase or whatever you look at.
yeah, Coinbase or crypto.com's platform. It's, Crow is a crypto, not a stock.
Yeah. So
You gotta have
Marina,
it.
the only trade we got going on in Circle is I'm long the stock right now. I'm trying to round up to a couple hundred. And the only trade we got going on Circle is actually on CRCA, the 2 time. And the trade is the options we're setting up is a naked put anywhere you want. 17, I'm going in on today.
Yeah, I'm at 17 right now for me. I sold that last week, and Jack's thinking about going in it today. So there you go.
Definitely
But
going in it today. Yeah. I'm going to add that to, I got a lot on the table. The TSLL naked put, the KWEB debit spread, closed out the NVIDIA on Friday. Got another naked put on IBIT today at 67.
yeah, look at that TSL. I sold that 20 last week. It's coming back. I mean, this thing's on the rip again. Dip is over last week. We're going higher again.
Yeah,
So
I would love them to put it to me at 17 on CRCA.
yeah, I mean, we just talked about the potential upside on CRCA. I mean, 75. If I got it at 17 and I ride it up to 75, that'd be ridiculous. Ridiculous. I mean, even if we got to 50, it'd be ridiculous. Like,
Yeah, this
so
is probably just to put this in the big picture. This is the most speculative thing I've got going. There's no reason. Like normally, the reason I would get into a trade is what I see in the trend. This is too early, so it's just a 100% pure speculative play because I think Circle's going to pan out and end up being a great stock to trade.
and Jack's convinced me. Let's try. Let's go.
Well, you convinced me on the KWEB, so we're even as far as
Yeah.
selling deals to each other.
I mean, we might as we're teamed up to do this show. We might as well, like, we both
Well,
have ideas. Maybe they don't all work out. Substantial risk of loss involved trading,
yeah.
but a calculated risk is worth it to me. Like this has ridiculously juicy premium, and I found what I thought was a great way to play. I shared it with you, and now it sounds like you're kind of agreeing too. So it's just amazingly juicy, and it's better than anything you could do on Circle itself.
Yeah. No,
Like,
no, sure, everybody can do this. All right. If you're doing a naked put on CRCA, you need $1,700 or 20% of that. So everybody could participate in that. Um,
but this one right here, you would have to have if we just sold an at the money.
no, 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 no.
It's gonna be rich, Jack. It's gonna be really rich. And
Mhm.
we're only out to the 17th on this CRCA trade. Let's take a look at the option chain here. I may pull up a live one at the broker. Let's just look at the 17th. I mean, it's got $9, but still, that's not going to be much of a pullback.
No.
Even if you came down here to 140, I mean, this thing been pulling back that much in a day. I mean, we were at 140 last week.
Mhm.
We were at 130 last week. So $2 premium for 11 days. I mean, that's still pretty fair, but you're going to have to put up $13,000 to make that 200 bucks versus put up 1,700 bucks to make 180 bucks. You see
Yeah.
the difference in the risk reward?
That's why we're trying to find the most efficient way to take the same premise in the trade. And it happens to be on this one.
And CRCA just happens to outweigh this like almost 10 to 1 on
Mhm.
the reward for the risk that you take on. Is it more risky with the 2x leverage? Absolutely. Absolutely. Is it 10 times more risky? I don't think so. Not for me.
I don't think so.
So,
It's a smaller amount of money than what you would do on the stock, and it's got twice the upside. So if you think CRCL is going up in the short term, the play is CRCA.
Absolutely. Now, like I said, a 50% pullback in CRCO could be devastating to CRCA. That's why I only have one contract for me, and I trade with hundreds of thousands of dollars of my family's money. So,
Now we had a new all-time high today in IBIT. And I think we had a new all-time high in actual Bitcoin.
yeah, we
120.
did. Look at that, baby. Go.
Yeah,
Breaking out.
it's got to pull back here though. A little tiny drop would be awesome. So the 67 strike price naked put was the one today for 260.
Let's see. Let me pull that up on a actual trading platform. Pull it over. So you were looking at the how far out were you playing?
Playing that till 46 days out, so that would be November
14th, maybe. Nope, 39. I see. November regular 21st.
Okay, let's see. That was for
Yes.
the November 21st,
Yep.
67 strike price put for 260. That works out to be 20.1% in 46 days.
That's a pretty rich one too.
That's a fat one. That's what I and I wouldn't mind taking it at 67. I got too much of it, but I still think it's going higher. I'm way too heavy in it, but I'd do it again at 67. I'd take the stock at 67.
Now let's review that just a little bit on where we might go in Bitcoin. Just give everybody a little update in case you don't watch my morning show or keep up with anything I say, or maybe it's your first time on the show. If so, let us know in the chat. We love to welcome new people every time somebody new shows up. So right now we have my technical analysis pattern. This is a trend pullback continuation pattern. I call it a market roadmap bounce. This orange line is my market roadmap. I give it away on my YouTube channel. All you have to do is go to jeffreytrader.com/YouTube. Check out the video that's pinned that'll play when you load up the page, and I'll give you the code to put it on your own chart. Now, if you want an easy button to just add it to your trading view chart or even your thinkorswim chart, I charge $5 for that. And I can drop the link if there's demand. But basically, price comes down, bounces off of this line. Once we get a close above this pink line, this fuchsia, magenta, whatever you want to call it, it's the 61.8% fib line. Once we get a close above that, it is 75% likely to hit. Price is 75% likely to continue on the way up to that purple line. It is 70% likely to hit the 1272 just above it. It is 35% likely to hit this 1618 without any kind of pullback. Just rip right on up there.
So that would be at 136,000 per coin. Yeah.
That'd be 136,000. So
Can you
from where
drop
we are right now, that would be roughly 9.5% higher.
can you drop the link in there for the $5 deal?
Yeah, 1 second. Let me type that out. That should be it right there. $5 deal.
Is the government still shut down? I
Yeah,
want to stay shut down.
absolutely.
Oh, like
And
this.
Trump's thinking it might stay down for 2 months.
Wow. I saw he was a little upset today. If they don't get back to work, he's going to do something to somebody. He's making threats. But
Well,
hey,
I
I
mean,
shut down. If the market can rip like this when the government shut down, nothing can stop the market.
yeah. Well, I mean, we talked about this for a week or more before the government shutdown. Like, shutdowns are typically bullish anyway. It just typically is. So, well, yeah, I just shared that with Sarah and Jack instead of everybody. So let me retype. Let me throw that back into the actual chat for everybody.
Jimmy says clearly we're fine without government. Yeah.
We are for now anyway.
Shut down. They're saying it won't open till the 15th.
That's we were
Speaking
looking at that poly markets,
of,
and oh, that's the Fed decision. Let's see the shutdown, maybe right here. How long will the government shut down? At least, I mean, more than 10 days. Looks like more than 15 days. Put us on down in the month. And more than 35 days is, got a fair amount here.
Robinson Royero picked up $5,605.10 tax free. Way to go,
Boom.
baby. Doing it this morning on GLD and TSLL. Nice way to start the week with a nice profit, Rob.
Now, the bigger technical analysis pullback on Bitcoin. I need to finish what I was saying here.
Yeah. Now, you
We
got to clear me up, though. Do you see a pullback or do you see a run from here?
so I mean, we have upside targets to go in the short term, possibly as much as 9% upside before we do another little rest or pullback. But looking at the bigger picture expansion here, this pullback that started in 2021 through the bottom that happened in 2022 on a weekly chart, we still have this expansion to go up to about 167,000. And we've already passed the 70% likely target at 100,000. 35% likely. Now, Bitcoin in particular, we've always hit this target on the 4-year cycle. Like there hasn't been a single cycle yet. This is the fourth cycle, actually the fifth, because it actually did it on the not really IPO, but initial coin offering, I guess, if you will. When the coin first came into existence back in 2009, we did a fib expansion without a halving event, and this level got hit then too. So this is the fifth cycle, and that's always been hit. So 167 is kind of my upside target for the ideal place to at least hit. We may exceed it slightly, but going off of, let me remove a couple fib lines so we can get a little clarity here on where current price is right here, about 125. If we pop it up to that level, we're looking at about 34% further upside. IBIT moves basically 1-to-1 with Bitcoin. There's no leverage here. If we got that 34% upside from where we are, this could push it on up just a bit, roughly in the 95 area, Jack.
No, I would be taking some profits up there. I got
I'd be taking profits before we got there, but
well, I'm still, I got too much, but I'm still buying more. Uh, it's not balanced at all. It's way out of whack, but I like what's going on here.
now if we get to that level though, we could experience you may not like this number, but upwards of a 70% pullback because that's the cycle that we've had 5 times before. So for those getting into it now, be aware that there may, starting in 2026, be upwards of a 70% pullback that could bring it back down into the 30s on IBIT.
I wish I could bet on that not happening.
It's happened every 4 years so far since Bitcoin's been a thing. I wouldn't bet against it necessarily, but we'll see. 72% of all the Bitcoin is held privately. At what price do some of those people get motivated to start letting go of their Bitcoin? Now, on the bullish flip side, over the weekend, I saw a report that 30 to 40 countries are seriously considering starting a Bitcoin strategic reserve in a major way with hundreds of millions, if not billions of dollars of Bitcoin locked up in their strategic treasuries. That could be quite bullish.
With no plans of selling, which
Yeah, with
is
no plans of selling, just a strategic reserve that they're going to keep indefinitely. Like that would lock up a lot of money's worth of Bitcoin.
pulls back 70% just because I think it's changing hands. And that kind of a drop would be extreme. I can't see it happening. Someone would step in and start buying before they'd watch it drop 70%.
You would think so, but we didn't have that back here. This was a move from 2021, 76%. Back here in 2018, much less popular, but 83%. 4 years before that. Nope, grab my measuring tool. Right there to the low, 86%. So the pullbacks are getting slightly less, but I'm still thinking somewhere 60, 70% could be what we see if a drastic pullback takes place. 93% right there. So these could happen. Yeah, 1, 2, 3, 4, and this will be the fifth one. I don't discount history repeating itself, Jack. I just don't. It's never exactly the same story, but it does rhyme a lot.
It does rhyme a lot. I don't see it any way that's happening. But statistically, and the chart says it could, but I don't think it's going to be that way going forward.
We have different dynamics, but human sentiment is still human sentiment. All right, everybody. So
Does that indicator you have work on Thinkorswim? Because sure
it
is
does.
that.
That's what I said. It does work on Thinkorswim, or and with the code on YouTube, you can put it in any platform. If with just a little bit of asking AI to help you out, you can put it in any platform at all. So, but we do have a toss.mx link in Discord. You can click it and add it to your chart.
Yeah,
All righty. That's IBIT right there. Potential for 95. We'll see. This could be in the final throws. We don't have the long-term history. This did IPO. This ETF came to the beginning of the history, to being last year. So we don't have the pullback and everything on this chart. That's why I had to use the Bitcoin chart to kind of predict. It does move kind of 1-to-1 percent wise with Bitcoin, because they do actually buy and hold Bitcoin and nothing else. It's Bitcoin, only Bitcoin, nothing else. Does not pay a dividend.
leverage.
Does not
Jimmy
have
says
leverage. Does not have anything. Just has a cost expense ratio of 0.25%.
Jimmy says we're in quarter four, and prominent figures have Bitcoin hitting 250,000 to 750,000 by the end of the year this year.
I'm just saying.
That'd be a hot move.
Now, another thing, another way to look at this. If we come over here and look at infinite market cap, it's just 8marketcap.com. If you've never looked at this before, gold's sitting at $26 trillion right here. Bitcoin and silver have been hanging out together. Silver's actually slightly above Bitcoin right now, 2.7 trillion. Bitcoin's hanging out at 2.5 and 2.49. For Bitcoin to go from 125 to 250,000, that $2.5 trillion is going to have to come from somewhere.
Give it the largest market cap on the planet.
Well, except for gold.
Except for gold.
It'll ramp above Nvidia if it did that. So where does $5 trillion come from? The only things up here that could give up that kind of money is gold. Nvidia could go to zero and you still don't have, you'd have to cut Nvidia in half to get half the value to go into Bitcoin. So, where does $2.5 trillion come from to boost the level of Bitcoin? Now, you could say, well, it's speculation and pushes the price up and blah, 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 blah. How many people are going to want to sell as we get to those levels too? So that's it. Just be careful. Think about it. Law of big numbers. When these things get big, they have a hard time going crazy higher. So institutions don't have, even if Nvidia took half of their stock price and bought Bitcoin, that's barely enough to push Bitcoin up right there. So just keep it in mind. Just keep it in mind. Companies don't have trillions of dollars. That's my warning. All right, Jack, what do you got?
Let's take a peek at KWEB.
Yeah, KWEB. It's holding its own. It's like the pullback from last week. Didn't really pull back much, pull back from last week, coming back up in the middle of the range from Thursday, Friday. Still have upside potential.
Pull in it.
I bought, for those that don't know, I flew out to November. I bought a 45 upside call and sold a 50 upside call.
I did the same thing.
Now, why would I do that? This is China Internet ETF, and it has a bunch of stuff like AliExpress and Temu and uh, Tencent, and let me see about more about the fund right here. 10 Cent Holdings, Temu, Baidu, JD.com. These are a lot of Chinese companies that have been suffering quite a bit. But the Chinese government is pumping in trillions of yuan, which is billions of dollars, into their companies to try to get them back on the track of growth. China's sick of their growth not working out. They're on a plan. And if you look at the AliExpress or Alibaba stock here, this has been kind of beat down. It took a beating into 2022. The US market bottomed out about the same time. This thing kind of double bottomed. And now it's just starting to recover. Even if we came back to highs right up here, this is sort of like the Amazon of China. Kind of. Not exactly, but kind of. And if they just come back up to the highs, that'd be a pretty nice move up. And you look at the technical analysis pattern on the bigger picture pullback here, that pullback to the bottom, we're coming up through the 618. That sets us up for a potential move to 400 right up here. That'd be pretty juicy. That goes right into KWEB. Then we have Baidu.
I've got the exact
Same.
trade on. And I've got my good till cancel out there at $3. I got into that trade. I bought the 45 and I sold the 50 strike, and I got a debit of 96. So that's $96 to take an opportunity right here. I did a little more than one, but it just goes to show you, you can get into some of these trades for less than $100 that have
Yeah, right
great.
here. I bought the 45. I sold the 50. Right now it's going for 90 cents.
That'd be better than what I got it for. I got it for 96.
Now the upside potential here, difference in the strikes, $5 minus what you paid. Let's just say $1. So that's $4 potential upside for $1 of risk. A little better than that at 90 cents. It's actually $4.10 upside for 90 cents risk. That's a 4-to-1 risk reward. Risk 1, potentially make 4. I have my good till canceled order at 3. I'm really just gonna triple my money.
Yep, same thing. I don't even look at it.
And this is just a let it ride.
Let it ride. I got it. When you got it out there at that good till cancel for yourself, you don't have to watch it. If it's going to do what you think it's going to do, you don't even have to be around the computer. Yeah, you can go out longer than 46 days.
You can. The cost and benefit analysis kind of changes a little bit.
Our thinking here, administrator, is that this is going to happen quick. This run Chinese pumping their own stuff.
If you go out to December, look at the cost.
Mm-hmm.
$2, it starts being more, and maybe I have too many contracts thrown on there. Let me redo it really quickly. 120. There it is. That's more like it. So you almost 30 cents more cost. So you're giving up quite a bit of money, quite a bit of potential. Golly. Excuse me a second. All right. You're giving up quite a bit of your potential to buy that extra time. Now, this has been an ongoing trade for me. I'm actually in the October. I did a 41.47 and back in late August. And this one already paid, already, I had like an 80 cent cost. I'm at almost a 4x right now. I actually let the 47 go because it was actually profitable. Like it was below what I bought it, or it was, I had sold that to offset the cost and it was below what I sold it for. So sell high, buy low. I closed it out. Now I just have upside potential here. Now I expect this to continue grinding higher into November. Maybe see this one go into money also.
Administrator says another guru recommends super long out debit spreads. What do you think of that?
I don't think there's any universally good way to. Anybody saying that's just like you just got to be careful. What's your plan? Not all instruments are the same. Jack and I have talked about that quite a bit.
Yeah, I don't see the benefit of a long-term debit spread at all. Uh, these things work in the shorter term. They're not, I don't like doing a long-term debit spread because I paid to get into that trade and I don't want to see time decay start to chew on that thing like a dog on a bone. And I don't like it long-term like that. If I'm doing a debit spread, it's going to be shorter term, week, 10 days, a little more.
What are we talking about long term too? With something with an IV term structure climbing higher like this, your longer term, you're going to pay more. If you can find something with a term structure that's more like this, then going out longer term, you get more time for your money. But you also got to be right on the timing for that debit spread to really pay out in your favor. If you buy too much time with a debit spread and it works out in your favor, but your IV on the short is going to be ramped up and you may not even be able to close it out for your profit target.
9 months to 12 months is way too long. You're tying up all your money and the thing has to work. So there you got two bad things. When you go long term on a debit spread, you're buying that time. You're paying a lot of money to own the action for all that time, 9 to 12 months. I think that's not a good deal because you don't want your money tied up for 12 months when you can do a trade every week or two with your strategies. That's not a good deal. You're going to see time decay chew on that thing. And Jimmy asks about leaps. I don't do anything with leaps.
It's
See people use leaps like a poor man's covered call, but that's a bad idea too.
see if this plays out, like this would cost me $13 right now. If I was bullish on Apple, I think I would expect it to play out way before. It's a $30 upside for $13 cost. I mean, it just doesn't make sense to play that kind of 1 year out right there. Now, another strategy you could do, just you could buy a call and then you can come over here and sell a put credit spread to help finance this. You could just do what they call a synthetic, buy a call, sell a put. That's less money right now, but you have unlimited downside. Well, you got unlimited downside if you just buy the shares too. Now, to help limit the amount of money that you would have to put up with the broker, you come down here about 20%. So 10% is $26 lower. So we're looking at about $50 lower. So you have to buy about a one right there, help limit your risk. And now you're back to $13 cost, but you have unlimited upside. You're not capping your upside like you would with the debit spread. To me, this is a better way to play. I don't have a great way to illustrate this on this platform. Let me load a different platform that can show this the upside risk here. Give me just 1 second. I'll load a different platform that can actually show you the risk reward here.
Yeah, Jimmy's saying that 1017 and 1121 seem to be the sweet spot for open interest. Yeah, there's going to be tons of open interest and volume coming up all this month, rest of this month, all in November is going to be big, and then December, of course. These 3 months seasonally have been the best. I don't always put a lot into seasonality, as you guys know, but uh, there's a lot of different things happening this time that normally don't happen in this seasonality, like new all-time highs across the board. I don't think that's ever happened in one of these seasonality studies.
I'm going to buy the call, sell the puts at the same strike. Let's see what the analysis looks like. Just like stock, 1-to-1. Right? What's your max loss? Same as just buying the stock. It's called a synthetic stock position right here, but it does have an expiration date. Now, to limit this overall loss right here, add an option. About 20% down is the general rule of thumb. Now you've capped your max loss to $6,000. And you capture all the potential upside the same right here as if you bought the stock. All right. If you've never seen this before, it's called a synthetic stock position with a protective put.
And that's what you have as the basis for a lot of these yield max funds. They got a synthetic and they're selling calls against that. And that's why it can
Yeah.
be so bad.
And you can come in here and sell weekly calls against this position. Your broker will let you do that and lower that cost even more along the way. And it should be, $6,000 max loss. That's if price went all the way down to your protective put down there at 210. That would be your max loss. And like I said, you could sell calls against this all the way to expiration in 1 year from now. Now, flip that around. Do a debit spread. Buy the 260 call, add an option. Once you get much above 290, there's not a lot of premium. We'd sell that one. $13, same kind of cost. But all of a sudden, you've capped your profit. Your risk is quite a bit lower. But if you're bullish anyway, you've capped out your potential profit here at only $1,600, $1,700. That's almost a 1-to-1 risk reward right there. Whereas the synthetic I just showed off had an unlimited upside for the $6,000 risk. So I feel like there's right trades to play for right tickers. It's not a universal thing necessarily. If we went and look at KWEB, we're playing out to November. Let's just look at what this, I have one of those in this account right here. We were buying the 45, selling the 50, and selling the 50. Roughly 90 cents right now.
Still a good
Look at the
trade.
risk. Now, unlike the Apple trade that was way out in time, this one's actually more price responsive. If we got up here faster, you're going to have more profit. I'm only going for the $3 profit that right now would only take a move up to roughly 53. And current price, underlying price, 53. So now to get out to expiration, $400 profit. Actually, I'm only going for $200 profit. $200 profit if you have $3 price. So I'm actually looking for that price, 49 right there. And that's in the near term. That's not even going out all the way to the end. If you use the Trade Lab function here, pull this thing up. Come on, what are you doing? It's freaking out on me here. Here we go. Right down here, you can actually see what happens time-wise and price-wise. Now, this gets a little nerdy. Out here in time, maybe it takes to Halloween for this to play out. Where do we have to be to get to our price target? Shows you right about, we got to be at 48.70 roughly by Halloween to get our profit. See if it happens by 8 days from now. We're gonna have to be a little richer on the price. We may have to be up around 49 to get there. Now, if we get out there closer to the beginning of November, a month from now, right in, yeah, about the 8th of November, we don't have to be that high to get our $200 profit. We don't have to be at 48.30. That's the way debit spreads kind of respond. The closer you get to the expiration, the more price responsive they are. In the beginning, when you've got long time to expiration, you're going to need price to be way above the spread to get your majority of profit. So there's a right tool for the right trade, I feel like. There's no universal rules in like which trade is best to use. I use a whole variety of tools. I sell puts, I sell calls, sometimes I do credit spreads, sometimes I do debit spreads. These are all tactics. There's no single tactic that's the best tactic all the time.
Nope.
And
Stop. A lot of other things. But as we showed you, between CRCL and CRCA, there's clearly a better choice for your money. And that's kind of the analysis that we put on it, that we're showing you how to make the right decision, how to get the biggest bang for your buck, how to put the odds in your favor, how to stack probability.
And that synthetic position on Apple was only looking for a move up to this area, basically. Right there. So, yeah, good job, Carol. Got an 87 cents. That's 87 risk. I mean, you could lose 87 bucks if it doesn't work out. So, no guarantees that KWEB is going. It just looks like it has upside momentum and can keep going higher here into that holiday Christmas season. Looks good to me.
Too. I didn't
All
know
right,
it.
Jay, right before we came along, I sold some 21s on Gap. Sold some 21 strikes.
Yeah, you're really squeezing all the thread out of this thing.
It's so juicy to me for something that pays a 3% dividend and hadn't really moved. But the
Oh,
beautiful thing I like here, now this has a little bit different pattern. It has nothing to do with the orange line right here. This pattern, I'm going to turn that orange line off. This pattern, this is an explosive pattern that I have made the most money trading. That right there is what I call, it could be a 1-2 or an AB, Elliott wave wise. That's a potential trend, potential pullback. And then we did it again in a smaller fashion right here. We nested it is what I call it. It's a fractal type pattern. This move up, this retrace, same kind of proportions as the bigger one. This gives this some upside potential, some explosives upside potential. Potentially break out and get a run higher. So once we did this last week, I started being a little more aggressive on this stock because of the potential for this to make a run
yeah.
up into this 44 area right here.
It's going to fill in that gap at 28.
We have the potential to fill in that gap at some point out here,
And
but
then
then it's done this higher lows twice, and it could do it again a third time or fourth time, and that just pushes up the upside target each time it does that. I've made some of the biggest trades in my life chasing after this pattern. We talked about it on Friday, how I did this on NEM. And this is the same kind of pattern right here on Gap.
Now,
Now,
is that the Elliott wave or is that a part of an Elliott wave?
now this would be the potential start to an Elliott wave right here.
And an
Is the
Elliott wave,
1, 2, and then it would be like a minor degree 1, minor degree 2. The next move would be a 3, and then a 4, and then a 5, which would be the 3 of the bigger pattern. 1, 2, 3, and then you get a 4, and then you get a 5 from there. And that's just with what's on the screen right here. So this is a potential major bottom here with a nice fat potential upside. And it could go much higher than that because when we zoom out even further, there's another one, and another one, and another one, and another one. So this is really nested up with this bullish pattern. I've been watching it for a couple of years. A&F worked out the same kind of situation. Right here, the move up, the retrace, and then that giant run way up in there. Now it's taking a rest. And it'll probably, once it gets done resting, probably somewhere around the 50 area, it'll make its final move. Probably in nearly the same size as the first move. It should take us up to about 376 on ANF. But that may not play out for a little bit, possibly out to, sometime in 2026 when we bottom. And then this could take a couple years to play that out right there. So Gap, I could be playing Gap for a while.
that's a famous technician, Elliott wave.
Yeah. So
A lot of people study it.
it was kind of the big changing point in my trading life when I learned this. Elliott Wave and Fibonacci. The book by Frost and Pretcher is the Bible of Elliott Wave. Let me see if I can find it really quickly and show it to you. Elliott Wave Principles. Yeah, this is what it looks like right here. This book, you can buy it on Amazon. Elliott Wave Principle by Robert Pretcher and AJ Frost. And
A lot of reading. I'll just tip you guys off if you like getting into the weeds. You're gonna love that stuff. Boy, does it get nerdy. Which is
yeah, it
why
gets real
Turnmire,
nerdy real fast.
is why you love it. Yeah, if you like reading a lot, you'll love that one. And the only other book I would put up against that is Options as a Strategic Investment by Macmillan. If you can handle it, that's a long read.
This one's not super long book, but it's a couple hundred pages, I think. But it's really nerdy, packed with lots of details. And there's some rules, and there's some guidelines. There's things that have to happen, and there's things that typically happen. And a lot of people get those all confused. And some people read it, and then they think they can just slap 5 waves on anything, and you see like 1, 2, 3, 4, 5. That's got to be a 5 wave, and it's not. It's not the way it works at all. It took me. I'm a smart guy. I pick up things really fast, and I thought I had it. It took me 4 years of actually practicing it before I started nailing more of them in a tradable way than I did just getting them just completely stupidly wrong. And I've worked with some great traders of the way, some great mentors that use this stuff for banks and stuff like that. And it's the only thing I found that lets me predict where price is likely to go next. And that's how I predicted the Nike was going to hit 48,000 over a year ago. And here we are. So I make some crazy predictions. They come true.
Yeah,
And
make better predictions than anybody I know.
so this one right now, does this have to go? No, this can fail. This can break down and then make a lower low and wreck all the things it's set up for, a couple years now. But it has that potential. Rocket Lab had that potential. That's where I made a big chunk of money. Now we're making that 5th wave move higher, and we're probably going to retrace, maybe back down in the 20s, and then I'll set up a whole nother set of trades. So it's just one of those patterns that I like to catch the wave threes, but the thing about it is it doesn't matter to me if gap is a wave three or if this is just corrective move up, because the ABC and the 123 have a lot in common except for how far they extend on the upside. So this could still be just a ABC correction and play out right there in the 30s, or it could be a wave three and play out up here in the 40s. I don't care. Like, could be a ABC, could be a 1, a 2, and a 3. The difference is your target. Usually I go for the more conservative approach because that's more guaranteed. But C's can come up short too. They don't have to get to the target. So
1 second.
yeah. NEM, I did this. We talked about this one last week. Same pattern. People are like, well, how did you know to hold on? It's because the potential A, B, C was right here. The wave three target is actually up here. But I'm already out with the profit. This is probably the biggest trade I did this year. I started it in December. I bought a 60 strike call out for January 26th. Did this in my mom's account, put about $1,000 at risk. These were like less than $1. They were like 90 cents or something like that when I bought them back in December. They came up here. I sold them out at 80 when they were $20 in the money. I made about 25 grand on this trade right here, risking about $1,000 and booking it out about 25,000.
Newmont's still hitting new highs.
Yeah,
Again,
it's still rocking. It may go up here to the wave three high, but I've already made my money in this high probability pattern between the entry here and that conservative target here. It may go on up to 114, and I'm not crying about it. I'm not missing it. I'm not FOMOing. I'm not trying to get more juice out of it. I've already booked my profit. I'm out. I'm moving on. So there you go.
Jimmy, are
There's
you
a
short, are you short the chips? Jimmy, he's crying. He says he's getting
there's a waterfall of opportunity every single day in the markets. If you know where to look, if you know what to watch, if you know what to pay attention to, there's opportunity every day. You can't trade them all, so you got to be happy with the piece you get. And there's something else, and move on. There's another piece to get tomorrow. So
got another piece coming up here this week on a hot stock.
yeah, Jack, what do you think about this one? They got something special coming out tomorrow.
Yeah, I think this is going to be good.
I don't know if you saw this. They teased. They had this. It looked kind of like a fan, or maybe I don't know if it was a wheel cover, or if it was a fan, or they showed it spinning, and then they cut to black, and it just said 10/7, 10/7, 10/7, which is tomorrow. I don't know. I don't know what's coming out.
It's hot, man. It's hot. It was getting weak there, and then look at this now.
This thing's right near all-time highs.
Yeah.
It'd be a shame to come all this way and not make a new all-time high.
I think there's just so much on the table this time. So much it's gathered the interest that it's needed, and it's setting itself up for some powerful. Look at this, a 4.2% move in one day.
It's just a Monday, right?
It's your average Monday.
This thing moves ridiculously.
How
And
I'd like to trade it every week, but only at the precise right time. A weekly
and
trade that
did you
costs.
happen to do it last week?
I did not. It's just been ripping though.
Yeah, I mean, it did dip further on Friday, so that would have got me a little cautious. It was dropping pretty viciously on Thursday. I didn't actually put it on either. So Jack, why don't we share this trade that you do weekly with
All
everybody?
right.
What do you say?